Fair enough, Gaurang. Stay on with us. Amit also comes in with his F&O strategies. Amit, the clear aspect that's coming out in the market is the volatility. How are you positioning yourself on the Nifty in terms of a strategy to counter and make money in the cash in essentially on the volatility?
Yeah, good morning, good afternoon, Tanveer. Exactly, markets are quite volatile, and what we are seeing is both long and shorts are getting squeezed in the markets because of the volatility that we have, especially on the mid-cap side of the market. So what we are recommending to our clients is, because of increase in volatility, implied vols of options, which was like around 12%, has moved to around 14.5, 15%. So investors and traders can go inside, write calls in markets. So because we don't know if market should stay here or go down, but definitely upside seats capped for the moment. So traders can buy 5,800 strike call options at around 44 rupees premium and sell 5,900 strike calls at 21 rupees. So there's an investment of around 2 rupees in the trade. If market goes up, you will make benefit. If market remains here or it comes down, the spread will open up, and at which point you can unwind the trade.
Okay, so buy 5,800 calls at 44 and sell 5,800 calls at 21, which would mean that your initial investment would be around 2 odd rupees. Having said that, the most volatile of these spaces, Amit, has been banking. Do you have a strategy there? Maybe, I mean, SBI or some of the others?
Yeah, so exactly. So when markets were rallying up, banks participated quite a lot in that, and bank index moved from around 9,600 to around 13,000 levels, and now it is correcting. Also, technically, it is below certain key points that you have. So what we are recommending traders to do is go and write ratio trades in SBI also. So SBI, during the RBI policy at around 20 to 50, has come down to around 2050 levels, and the stock should languish at the current levels. Also, in the month of April, you don't have SBI results, which typically come in the second month. So you don't have any event risk to play for. So traders can buy 2250 calls at around 17 rupees and sell 2300 calls at around 12 rupees. There's an initial inflow of around 7 rupees in the trade, and you will make the 7 rupees if SBI remains any value below 2350 levels.
Let's just bring up United Phosphorus. That's a quick strategy coming in on SBI. 2059 is where the stock is positioned. United Phosphorus and promoters have pledged by 1.3 crore shares with STCI Finance. We'll keep the stock on the charts, but let's see whether there's going to be a more significant reaction to it as we go along. It's down about 1.5% as we speak, but Neeraj is just trying to analyze how much does that account for in terms of total, as a percentage of the total equity. How much is it that the promoters have pledged?
Yeah, they have 12.77 crore shares. So I'm guessing out of their holding, they've pledged around 10%. That would be something like that. Yeah, that would be the fair calculation. Yes.
Yes, 1.3 crores, and you're seeing the stock go down about 1.5%. Ashni, on the charts, United Phosphorus.
It's been a bit of a nothing stock. On the downside, it finds support around 110. On the upside, it hardly crosses 140. But maybe the good news is that it hasn't fallen 70% from the recent highs. But I don't think it's made big moves. Around 110 is the base, and 135, 140 is the upside.
Okay. Gaurang, specific views, while we're talking about pessimism all around, HDFC and the kind of moves that it has made, stellar upside, day by day it keeps on building on to the franchisee and to the stock price as well. What does one do here? What would your advice be to somebody who's holding on to HDFC shares?
I think again, Neeraj, the fact that we've corrected so much, and when you have a particular stock, holding out and performing better, the views generally are that you would definitely stay invested if you have a long-term view. That's point number one. Point number two, I think the moment your crucial levels are taken off, I don't think there's going to be any sector or stocks that's going to be holding out. So if you're not looking at immediate short term, I think if you just look at the kind of performance that HDFC has shown, it really calls for a definite be invested kind of an approach. But on the flip side, keeping in mind that this is one of those interest-related stocks, our view is that in the months to follow, I don't expect the interest rates to come off very significantly, not even 0.25 basis on the repo by the Reserve Bank of India. So if you have these kind of dark clouds on the horizon, then definitely there will be a little bit of concern, and don't expect these kind of outperformance to continue for a long while. So purely short to medium term, there has been a decent uptick. Take money home. If you're not bothered about the interest rate scenario cuts happening, or if there's going to be any sizable amount of correction coming into the market because of various reasons that we already know, then I think you are looking at long-term look opportunities on bad days to get into the stock.
Yep, look opportunities for bad days. Is it a bad day for some of the small caps? Ashwini has a recommendation or 2 or 3 of those. Ashwini, I understand the problem with these because you can't go really short on these stocks because they're not in the futures and options space. But would you recommend all of these 3 for today?
See, people need to look at their risk preferences, and I don't think beyond a point, small caps really bother about, market moving up or down. It's a sentimental thing. Small caps have been out of favor for a long time, so it's not like there are big long positions here. So Radico Khaitan is a buy with a stop of 115, target of 153. It's already corrected to its 200-day moving average, now bouncing back. Parental Drugs is a buy with a stop of 81, target of 108. Again correcting to supports around 87 and then moving higher. And DPSC Limited, this is a buy with a stop of 16, target of 21. Again, buying can be seen at lower levels.
Okay, those are some ideas from the small cap space from Ashwini. Come to you, Amit. And DLF has been one tricky stock. One day up, one day down. The volatility over here has been fairly high. What's your strategy for DLF?
Yeah, so DLF in fact has moved all over the place. So started from 240 first week of March, went all the way to 290, hit a 52-week high and came back to around 230 levels. So we think trading anything using calls or puts at the money would be very tricky for the stock. What we can see is the upside definitely, because of the way realty, other stocks are moving, seems capped. There could be some upside in the stock because of the imminent meeting for the share sale that will happen in April. So whenever the stock goes up and the 300 strike call options you get at around 1.5–2 rupees, you go and write those options, you will make that entire premium. Losses will start if it goes beyond 300, but probability of that is very low given the way the entire realty sector is doing.
Gaurang, I would want, while you spoke about cap goods, what your